Nkem Azinge, a currency trader at UBA, joins me now for a midweek wrap of the markets. Thank you so much for joining me on the show today, Nkem. And just let's to walk back into how this week has played out so far for the markets.
Thank you for having me, Kenna. Well, the fixed income market, it started bullish with system liquidity opening at about 300 billion. But however, we saw that trend change on Tuesday. This is following banks needing to create liquidity to fund the FX wholesale auction that was held on Monday. So we saw a bit of sell-off there for banks creating liquidity. But basically, the market has been pretty quiet. We've seen choppy trades happen. In the bond space, it's also been really quiet. We've seen a lot of scanty buys at the long end of the curve. And due to that, we saw that yields in the bond space contracted 11 basis points. But barring any liquidity change, basically, it's just been a quiet week and expect it to remain a quiet week.
All right, but looking at the FX space, though, I'd like to know what's playing out there, especially with the fact that we're seeing oil prices, doing much better now.
Okay, well, oil prices have gone up to, I think, as of this morning, it was $30 a barrel. But what we've really seen drive our FX market has been that before the lockdown for COVID-19, we saw that the CBN suspended its sales to BDCs. It suspended its sales of invisible and SMEs. But then we've seen that they've opened up that, so we've seen increased supply in that area, so that has aided supply. Parallel market rates, as I last week just talking to BDCs, we saw rates, people pricing the parallel market rates is about 460, where we've seen that drop about 25 naira to be about 435. So we've seen that just the general easing of the lockdown is helping the FX market. We've seen the naira appreciate a bit. The INE market remains under pressure as the theme remains that there's no supply. We haven't seen FPIs coming just due to the global crisis, and there hasn't been a lot of export proceeds. But as the easing continues, we expect that businesses would slowly open up, and then we might see more production and manufacturing. So that would aid in the FX space. But generally, the INE market has traded around 385 to 395 naira. But it's been pretty quiet as well because businesses haven't fully opened.
All right, but looking at the liquidity in the market, though, I'd like to know what your call is for the rest of the week.
Okay, let's talk about April. In April, we saw maturities of about 900 billion coming. We saw coupons of about 150 billion coming, and we had a bond auction that was oversubscribed. So generally, liquidity in the system was basically high. So that led to the bullish trend that we witnessed. Going into May, where we expect lower liquidity, 600 billion, like you said earlier. We expect coupons of just about 10 billion coming in. So we expect that there will be lower liquidity, and that would also limit demand. For those who have maturities coming in, just given where rates are in the secondary markets of the NTB auction at single figures and automobiles as well as single figures, we expect that we're going to see them probably turn to the equity market where they can get investments as high returns as high as 13%, as opposed to staying in the fixed income market. But we don't expect too much liquidity next month, so we expect that there will be limited demand as well. The FG has also said that they were going to switch the borrowing of foreign borrowing to local borrowing. So we expect that would also have people sitting on the sidelines. So they will be putting their money in more FTN bonds and the equity markets as opposed to treasury bills.
All right, but very quickly though, looking at your outlook for the rest of the month, this is an MPC month, and what you expect for the MPC to do on rates and as well on the CRR.
I don't see them doing much on the rate side. I feel like we might keep rates where they are. The businesses are just beginning to open up. The CBN has, the IMF has recently just approved the 3.4 billion loan as well. So we expect that would come in and help the market. I feel like most likely we would see things just remain where they are. we just can watch how the market plays out for another month before anything is actually done to the MPR or CRR. So I think things would be left as they are.